And beyond that, we talk there around the changes to the standards in those standards, but across the board, it's something else Inflo's really focused on in 2022, and part of our kind of our raison d'etre, if you will, to try and stay ahead of and really be ahead of changes to standards so that customers aren't surprised by these last minute. So one of the largest ones, which Mark already referred to in the last session, was around the changes to the risk assessment standards in 315. We did a lot of work here talking to firms, talking to regulators, talking to standard setters in late 2021, early 2022, in order to ensure that Inflo's risk and response process within our Inflo work papers module was aligned directly with the spirit and the detail of the revisions to the risk assessment standards there. So looking at things like addressing risks at inherent risk factor level, splitting risks by their qualitative nature rather than just by their assertions, considering risks on a spectrum of relative risk and making sure that that's documented and well understood by the audit team, and thinking about relative risk. And we did that really early on. So you can see that our full Inflo release, which supported this, was July the 20th in 2021, which was quite a long way ahead of the effective date, because the effective date being the audits of December the 15th, 2021. So effectively audits that are happening at the end of 2022. So the full release, it's been, what I've included here, we've made changes to that as firms have started to use it and adopt it and provide feedback on it, and that's been a big part of our 2022 release. But this is something that we're really proud to get ahead of, and firms have really seen the benefit of thinking about tackling risk in a different way in order to make sure that that process throughout the audit is as efficient and high quality as possible when responding to that risk. We've done a similar thing as well with the changes to the standards 240 for management overrider control, and in 2022 we released Inflo Detect version 2, as we call it now. Everyone has migrated over to that, so now just known as Inflo Detect again for everyone. But this is quite a significant change to how we approach thinking about journal testing or transaction testing to identify potential fraud. And we took a 3-step approach to this, kind of a new approach to using data visualizations and data analysis in order to be able to really try and focus in on the high risk transactions. And that built out a 3-step approach. So the first step was, and this is again really highlighted by the changes in the standards, was focusing on year-end anomalies. So not necessarily testing all transactions that are posted at year-end in the general ledger system, but gaining a real understanding of what it is that was different about those transactions at year-end compared to the transactions throughout the year. And then laser focusing our attention on those unusual trends or the unusual anomalies at year-end, and to ensure we're focusing on the risk that's raised at that time in the creation of the financial statements. Step 2, which is also a new step, was then, or at least an elevated step in our process, is then about focusing on risks that you are aware of. So you understand the nature of your client and the activities that happen through the year, and from that you can build out expectation. Going back to Chris's comments earlier, you can build out those expectations from the data flows or the data behaviors of the data to understand and extract things that you know are risky. So common examples, management accountant left halfway through the year under some suspicious circumstances. You may want to look at the transactions posted by that user in their last few weeks or months. Equally, we have new account combinations functionality where you can set up for high risk or accounts which have seen problems in the past. You can set up an expectation of what postings should happen in terms of the double accounting entries for those transactions, and pull out the transactions which are doing something which is outside of the expectation, and focus our testing on those transactions. And what that does is it then leaves the approach that Inflo's taken since we first adopted Inflo Detect, which is then running a suite of 25 tests, standard tests, plus any custom tests you want to build, to try and allow Inflo to tell you as an accounting firm where there is residual risk in that population that you didn't necessarily know about. And that's the kind of things that you typically see in terms of the standards pulling out things like seldom used accounts or unusual posters at a weekend, a bank holiday, all those kind of good things. But taking our a fairly unique approach to that in terms of, rather than testing those things individually, building them together to get a risk profile on every transaction and pull the transactions to the top, which are hitting multiple variables within those different tests. Meaning that we can take, a laser-focused approach and test a lower number of items, but much higher quality output in terms of testing those residual risk items within the population. Again, that's something that was released fairly early on in 2022, but the process throughout 2020 was migrating all firms over to that, and there was some training needs and some changes to existing processes. Back to Chris's slide on change management, that in itself was a change management process, and we really felt that firms adopted that enthusiastically, and we're a better position now and a higher quality audit output now compared to where we were at the start of the year, which is great.